Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is daily analytical report, and where we'll try to look for the best trading occasions, and we'll scan the market and in terms of the technical and fundamental analysis as well. And it's also the first day of the new month, first day of February. So let's look for potential nice trading setups for February. Before that, we need to obviously check the calendar because you need to know what's going on the market. And for example, if you're like opening a position on Canadian dollar or New Zealand dollar or any other, you need to know if there's, for example, going to be data present for the particular currency. So Thursday is mostly PMI day. As you can see, we got PMIs from China, slightly better than expectations. We got PMIs from Sweden, we got PMIs from Germany. Germany worse than expectations, but still a very high number, right? Nothing to worry about, even if the number is slightly lower than expectations. It's still awesome. It's still great. Then we'll have PMIs from Eurozone, and half an hour PMIs from Great Britain, important for the British pound, obviously. Still to come PMIs from Canada and American PMIs as well. So yes, Thursday definitely PMI day. We need to remember that first day of the month, and tomorrow is Friday, so first Friday of the month we do have non-farm payrolls, so a number that everybody's waiting for. Maybe in the recent months the value, the importance of the non-farm payroll data decreased over time. At least I have this feeling, but still we should get some emotions here. But I think that the importance of this data went lower in the past few months. Not many people are so excited about PMI, about non-farm payrolls anymore. Okay, so that's what is happening in the calendar, but we cannot forget about yesterday. Yesterday we had FOMC statement, rate decision. As you can see here, rate remained unchanged. Fed statement was perceived as hawkish, so a positive for the American dollar. We got rates which remained unchanged, and few hawkish comments like economy to warrant further gradual increases in rates, inflation to rise this year, stabilize around 2% in the medium term, market-based inflation compensation rose recent months, and Fed sees gains in employment, spending, and investments have been solid, according to Fed. They changed the language in their inflation outlook. They said that inflation on 12-month basis is expected to move up this year. And in the last statement before that in December, they said inflation should remain somewhat below 2% in the near term. So that's more hawkish comment. And the chances for a rate hike increased significantly straight after this statement, straight after this decision. So as I'm looking on the chart of market implied of Fed rate hikes in 2018, it went significantly higher after this statement. Now the odds for the rate hike in March are close to 99%, so they are almost certain. So that's how the situation looks after the FOMC statement from yesterday. Okay, now we can move to the charts. On the charts, what do we have here? First of all, I would like to mention American dollar to Japanese yen, because look at that. You remember last week we were talking about this pennant, this symmetric triangle formation, right? First one, bigger symmetric triangle, then a smaller one. Both resulted with a bearish breakout and with a nice downswings, right? And here we were wondering how deep can this downswing go, how deep can this drop go, and we showed you the green area as a potential support, because this was a support created by lows from the second half of the April 2014 and from the first half of September 2017. And this is exactly where the price went. Not only went there, but actually used that as a support. So that was an excellent take profit place for take profit action. But in the same time, it was a great place for a bigger reversal. So if you were following our analysis, you should be happy with the outcome of this situation, because the price went exactly there, and now the price is 120 pips higher. There's still a negative sentiment here on American dollar to Japanese yen, so we cannot think about anything positive here, but still that's a nice technical movement on the American dollar to Japanese yen. And we should expect that those technical movements will be continued. That will be definitely nice to see another price action movements on this instrument. How deep this reversal can go, I think that Fibonacci can help us here. 38.2 looks quite tempting, especially that we do have those lows from here, from the middle of January, 15th and 17th of January. Next one is gold. Gold, which we're unable to force this resistance. We had a nice, beautiful upswing, right, for the past few let's say months, since the months, maybe weeks, since the middle of December, and the price was just going higher and higher and higher. They made new long-term highs, but they were unable to hold the price above that resistance from September 2017. And they bounced from this level and they went significantly lower. Here, let's draw a support here. As long as we stay above this green line, the sentiment is still kind of positive, but I wouldn't open a long position here. I think that there's a chance that we'll can get to this support or the blue one. Still, it won't be a sign for a reversal because we are relatively high. Let me measure potential targets for this. So yes, I think that this area, this blue area, looks quite good for a potential support or a resistance. Why? Well, we have two Fibonacci levels, but also the price was respecting that level like historically. So that might be a good place for a bounce. Next one is Footsie. Surprisingly, this support did not work. Well, actually it did, as you can see here. But the upswing here was very small. Well, small, it lasted 3 days. And it brought us 80 points. But it was definitely less than I was expecting. And the price broke the support, which actually questions that breakout. Makes it actually a fall breakout from this ascending triangle pattern. So now with that breakout, the sentiment here is no longer positive. That's a false breakout, and we should see with this kind of price movements, we should see the price testing the lower line of the ascending triangle soon. So I think that buy signal is no longer on the table here, and we should see the downswing. In my opinion, further drop and current conditions is more probable here. Next one is Bitcoin. Bitcoin, which is lost almost 30% in January. As you can see, we started here, huge drop. And it does not look good for the future. I'm enjoying the situation on Bitcoin. Not that I want the Bitcoin to go up or down. I don't care about that, but I'm enjoying that Bitcoin is moving technically. So is respecting the technical analysis. First we had this correction impulse equality pattern, so this drop was the same as this one. Then we got a pennant formation. Apart from the pennant formation, the price respected the horizontal resistance here. Now we broke the lower line of the pennant as expected, because pennant is a trend continuation pattern and trend here was bearish. And the price is about to test $8,700 for one Bitcoin. In my opinion, price going to the green area is just a matter of time. We should see the price getting there soon, relatively soon. In my opinion, we should get there very, maybe even today. Like, you know, Bitcoin is so volatile that we can go there in the next 5 minutes. Nobody would be surprised. But I think that the gravity of this level is so strong that we shouldn't get any problems in reaching the green area. What's next? Well, it will depend from the reaction on this level, right? I'm a price action trader, so I try not to I try not to predict what's gonna happen. What I do is I try to react on what based on signals that market is giving me. That's my job as a trader. Next one is Australian dollar to Canadian dollar. Here we do have a very good situation for sellers. Recently, probably I told you that, well, probably, definitely I told you that there is a nice bullish setup here, because there was. There was an inverse shoulder formation, there was a flag, but both those formations got denied. Okay, so even yesterday, still, maybe not yesterday, but on Friday there was a strong buy signal here, on Monday as well, Tuesday, yeah, kind of, but Wednesday brought us a reversal here. First the price went inside of the flag, which denied this formation, and most recently the price broke the horizontal support here, and this horizontal support is important because it was in the same time a neckline of the inverse head and shoulder formation. So if we will be able to close the day below the green support, the green horizontal support, that will be an invitation for the sellers to open short positions, and that will be a signal for the buyers to close their long positions. So in other words, to opening shorts. Right, so there's a head and shoulder formation is denied, flag formation is denied, that is a false breakout, and after the false breakout the price should go down. That's the outlook on Australian dollar to Canadian dollar. New Zealand dollar to American dollar. Situation here is, well, still it's extremely bullish, right? The price climbed very, very high since the beginning of December, really. Like, this upswing is unbelievable. It's 600 pips. Not much of a stop on the way. And the price met super important resistance. Why? Let me show you a daily chart. We had a resistance here on the middle of November. We had a resistance here in the beginning of February. We had a resistance here in the second half of September, and we got a resistance here just recently. And now a bit closer on a daily chart, on a daily candles, because what do we have here? Shooting star Wednesday, shooting star Thursday, Friday, okay, and now yesterday almost a shooting star. Maybe it's not a classic shooting star, but what is important here is that price has a long head on a resistance. Price has a long head on a horizontal resistance, which should be perceived as a very negative sign. Well, positive sign for sellers, but for the situation on this chart it should be perceived as a negative one. I'm warning not to go against the trend too fast, because still we do have a bullish trend, still the price is making higher highs and higher lows, so we don't have actually many bearish signals. But luckily, in the formations like that, we usually have a horizontal support or a dynamic support. In this case, it's a horizontal support. And what we should get here in order to open a short position is a breakout of the green area. Once we will see a breakout of the green area, that will be an invitation to go short. So far the price is above the green area, above the support, so there's no sell signal yet. Okay, that's the situation on Kiwi, New Zealand dollar to American dollar. Euro to British pound, we had a false breakout of the horizontal support, reaction for the false breakout, so the price climbing significantly higher, but now we are aiming lower again. In case of a price closing below the green area, that should trigger us a sell signal, and the price should aim the horizontal support here. Next one, American dollar to Canadian dollar. Still a negative scenario. Still a negative situation. Why? Because the price broke the lower line of the rectangle, then created a pennant. Maybe if you don't see this pennant, maybe I will draw you. All right, and broke the lower line of the pennant. Still, we are using this lower line of the pennant as a resistance. So there is a negative sentiment for this instrument. Dollar index. Well, that's not the most bullish pattern in the whole world. Many people said that this Fed FOMC statement was hawkish. Okay, fair enough. We don't see that much on the charts, to be honest with you. Right, it cannot be seen on the charts too much, like on the dollar index, because maybe we got a small upswing yesterday, but today it's all more or less denied. So it wasn't like the best buy signal in the world. The thing is that once the price will break the lower black line, that will trigger a sell signal here on this instrument with a potential target on new midterm lows. So definitely there is no buy signal for dollar index yet. I don't see it here. Australian dollar to American dollar on the H1 chart. You can see that they broke horizontal support, the green one. Now they are fighting on the next one, but it looks like we will test the next one. So the purple support here. Why? Well, the uptrend line got broken, right? Breakout of the uptrend line triggers a sell signal in theory. I would say that there's no sell signal here yet, because that trend line was steep. So even the breakout here is not giving as much. It's not giving us a strong signal because it was steep. So it could have been expected that it would be broken, and even like any correction can break as steep as uptrend line. American dollar to Singaporean dollar, they're trying a small reversal, but as long as they stay inside of the channel down formation, the sentiment is negative. Euro dollar. Well, recently, okay, how euro dollar looks like. We had this trend continuation pattern here, which is a flag. We're not convinced with that. Which is a wedge, I'm sorry. Here, as long as we stay above the green area, the sentiment for the short term, mid-term is positive. Right, that's the situation on euro dollar. On British pound to American dollar, I like it. I like what's happening here, because we also here had a wedge. And look how the wedge ended. The wedge ended with a hammer candlestick. And then straight after hammer, we got a bullish breakout of the upper line of the formation, and here we have a triggering of a buy signal on cable. And here we do have normal reaction after the buy signal, so new weekly highs. So the sentiment towards cable is positive. On Monday we wrote an analysis about that. No, on Monday, yesterday. Yes, yesterday. So it's still a good call. Traders could make some money on it. Euro to New Zealand dollar, well, I think it's time to slowly forget about this head and shoulder formation because the price does not want to go down. That's the power of the trend. Look, the trend line was respected. Here, 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 here. Sellers would have a chance only if the uptrend line would be broken. It was not yet, so there's no sell signal here whatsoever anymore. S&P 500, one of the worst sessions we had. 2 days ago, yesterday, I'm sorry. Here, yes. 2 days ago, yes, I'm sorry. But situation is still relatively safe, right? Not much to add on this instrument. I'll go from the very end. Euro to Swiss franc. This long-term wedge formation, which resulted with a breakout of the lower line of this formation, that triggers us a long-term sell signal on Euro to Swiss franc. Australian dollar to New Zealand dollar, and that's a false breakout. False breakout should result in a movement in the opposite direction, and that's what's happening. So look at that. That's a false breakout above the horizontal resistance, but also that's a false breakout above the horizontal resistance, but also at the same time a false breakout above the line connecting top of the head and the top of the right shoulder. So that was the movement which denied this formation, but the movement which denied this formation got denied itself. So the short option is back on the table here. DAX is still above the trend line and above the upper line of the wedge formation, so here the buy signal can be relatively safe. Euro to Swiss franc. Yes, there is still a sell signal here, a long-term sell signal based on the price breaking horizontal resistance. The next candle probably will make lower lows and lower highs, which will be a confirmation of this breakout. And WTI back above the horizontal support, so everything looks good here. There is a potential for another bullish upswing. Okay, so that's the situation on the market after FOMC. Few interesting signals, a few like false breakout patterns, which I like, which are usually very strong and they work. So probably good times ahead for the technical traders. Now we have a short break, and after that a webinar about trading psychology, about traders' minds. So I hope you all will be there. Thanks very much for attending, and see you tomorrow, or if you're gonna attend the webinar, see you in half an hour.